Let's record it. All right, so I'm gonna cover a couple of things, how I start my week, my day. This is the first trading day of the week for me. So there are a couple of things that you have to be aware of going into the new week. First one, of course, is going to be the weekly range, in particular the previous weekly range, right? You need to know where is the previous weekly range and where we are opening in relation to that range. So here to here, previous weekly range on DXY, we open roughly about discount. The order flow is bearish, right? So the range doesn't play a great role unless the order flow aligns with what you're seeing. So we're bearish and we're in discount means we do nothing because we don't sell in discount. Order flow is bearish, we're in discount, we do nothing. So we start anticipating either an immediate run to the liquidity or a retracement to premium to go short. Previous weekly low has been taken right here. So now we're looking for either price to continue lower to its higher time frame objective, or it retraces to reaccumulate or redistribute, depending on how you look at it from a market maker standpoint, and then lower. Last year, I shared this red line, I think, publicly as my drawn liquidity for DXY. It's there now, so I'm waiting for the next bit of information to show me what's likely to happen. With the whole recession thing looming, I'm thinking lower prices is on the cards, so I want opposing liquidity runs to get in. And this is going to be the next area I'm looking at for the draw, roughly about 101. Why here? We have a down day followed by displacement. This is displacement on a daily chart. Multiple days, same color, same direction. Large ranges, right? When this happens, by default, this should be inefficiently traded. So you should want to see retracements and then higher. The retracements didn't get back here. So we have an expanding market. And if you've gone through ICT month one, in an expanding market, you focus on the order blocks. Retracing or retracement conditions, you focus on imbalances. Consolidations, you focus on 50%, and reversals, you focus on liquidity pool. This is an expansion. Fair value gaps here mean less. The order block means the most to me. The order block is not being validated and we're getting higher prices trading above down candles. I remain bullish. So now, since the order flow is bearish, these are the pockets of liquidity that the market should be drawn to, in my opinion, which is why I had this one here first. If you look at this structure, it's the same as this. Bearish day, one-sided price action. Retracement, didn't get back to the order block. Liquidity should be here. And that's this line here. We're basically here now. So it's at the liquidity. I'm expecting a retracement and then lower. How far for the retracement? I don't know, because there's a whole lot of inefficiencies inside this leg. Most of the days don't open where the previous one closes. So by default, we have volume imbalances being created. The day closes here, we gap up. Closes here, we gap down. All of that. That's happening a whole lot. So this is very, very inefficient. But because of the time of the year when there's low liquidity, it's normal. Volume imbalances happen when prices either moving too fast or there's not enough liquidity in the market. Christmas doesn't have a whole lot of liquidity. It's normal. So do they want to start the year by rebalancing all of this and then this guy just keeps falling out of bed? I don't know. I'm open to that. But from a fundamental standpoint, there's a whole lot of talks about recessions, the Fed's not easing up. So bullishness is looming. But in times of sentiment, by the, what's it called again? Buy the rumor or sell something. I don't remember the quote. Something like that. So the recession right now is the rumor. The news is that the Feds are going to pump price higher. I think this is going to go higher. But I think it's going to sweep low first. So let's attempt to frame the weekly delivery. The order flow is bearish. The calendar doesn't have a whole lot of volatility. But if you watch the days, and I don't remember which days had the volatility. I think it was the 12. Let me just check real quickly. Thursday is having most of the volatility. So how we trade going into Thursday could be Thursday is going to cap the week and then we reverse. So if the order flow is bearish and I'm looking at Thursday to cap the week, I'd want to see Tuesday above Monday's high. And then I sell down to clear Monday's low. Thursday caps the week and then Friday just stays inside here. Pretty much the same on NAS. I were looking at that earlier. This is the weekly range, previous weekly range for NAS. We open in deep premium. This structure is a consolidating structure. Why? The daily chart traded down and created a low, retraced without breaking the highs that were formed before this low. So call this a major low. Before the major low, look at the highs or the major highs or major turning points or daily swing points. Between here and here, we weren't really breaking those. We're really retracing inside that range. So the market is still stuck in a range. We left that retracement and it failed to break outside. It's consolidating. Find 50% of this high, this low, find your premium arrays, and those should be the targets from a daily standpoint. Nice and easy. My objective for AEO has been met, and I've been waiting for more news in terms of more technical structure to tell me what's going on. And ever since this objective was met, where this arrow is, or this stick, there's not really anything significant happening. Took a high, took a low, took a high, no big deal. No major highs from over here have been violated, except this one that just got swept here. Whole lot of sell side liquidity to me is still building up here, and this overlaps with what I want to see on DXY going higher. So we could potentially be seeing a market maker model form on this guy and this guy. Both of these guys are setting up for a very fast drop lower, and I want to be here for it. And I don't trade GU, I just don't like it. S&P is always going to be similar to NAS. And still waiting for somebody to put their questions in the chat. This is supposed to be a Q&A. But yeah, it's the first month of the year and it's heavily driven by sentiment. From the recession talks to the interest rate talks to the FOMC stuff, there's a whole lot of sentiment taking place right now. Your focus shouldn't be trying to get an extended move. Your focus should be, in my opinion, right? In my opinion, your focus should be trying to capitalize on the guys who are already in the market. So where was there a sharp move or a spike in price? Those guys that are in profit, where are their stops? Where would they trail to? Those are the pools of liquidity that get raided in these conditions. Why are you expecting a major drop in AU and gold if it's a market maker buy model? No, I said a market maker model. I'm expecting bullish DXY here because it's at the objective now. This whole lot of sell side liquidity building. I'm not saying this is original consolidation. This to me is the start of the buy program. So this is going up. Where's the liquidity? These highs. I wouldn't want to see it get back above here, personally. Maybe here, but I wouldn't want to see it get back here. And then all of these lows now. I don't remember if grading a price swing is on YouTube, but if you fib the high to the low of the range and you find 50%, all the lows above 50% are engineered liquidity. Simple way to put it. Okay, USD JPY. This pair is weird. I actually did an experiment with someone. to try to call where it was going. If we take a look at this right now, it looks like DXY. The difference is I can clearly see this low right here being a potential target. So if I just extend it out, the liquidity has been taken. So again, when you're looking at market structure, reference points are paired with conditions. If the market is expanding, order blocks, retracement, imbalances. This is a liquidity pool. What condition is paired with a liquidity pool? Reversals. So if this was bearish and I'm expecting it to reverse, I'm now thinking every time I see an opposing liquidity run, it should set up a market structure shift. Meaning, bearish, I want to see it go higher. Every time we take lows, I'm going to watch the down candles that take the lows because I want to see that shift and higher. Notice this low has no candles closing below it, which makes this swing low rejection block, which means if I take this off and I put it on the bodies themselves, and I pull this over, the down candle with the lowest closing price that touches this line will become an order block. This is the down candle with the lowest closing price. So for my model, could be wrong, but it's my model. I'm expecting this to be an order block. Now, what conditions are paired with an order block? An expansion. This is not expanding. So now I'm expecting market to accumulate inside here. You could even play along inside this range as long as we don't take this low. And then I want to see price screaming back up into that. So Q1, Q2, my objective. Well, that's not far away, but that's what I'll be looking for. Bullish DXY. And then the anomaly, GJ, which usually whenever there's bullish DXY, this guy falls because of the whole US-China thing. Whenever DXY gets strong, JPY gets weaker. I know that was the original relationship, but since lately, the reason I've stayed away from this pair is because when DXY was weak, this was still falling heavily, like right here. DXY was falling and that was also falling, which means my correlation is off, which means I don't force my understanding if there's something here that I don't understand. Question in the chat, do you see pools of liquidity on inside bars, example 7159 on AU? 715. This is 701 here. Nope, this is 701. Inside bars are not something I pay attention to a lot. Doesn't really make a lot of technical sense to me. I pay attention to the range that they're formed in. So if this is an inside bar, I'd see it, but I'd pay attention to this candle first. If I was looking at market structure by themselves, but I don't do that. I look at obvious pools of liquidity. We have to remember that while the algo moves price and there is not buying or selling that contributes to price being moved, buying or selling is what or buying or selling interest rather is what the algo will reference when deciding if price is being offered high or low. That's how liquidity is hunted. So if this market is bearish, then there's a whole lot of buyers up here. That's a pool of willing liquidity. So orders get paired right there. If somebody large fund was bullish all the way down here, they'd be looking for a large pool of liquidity to offset. So that's why those old highs get raided, in my opinion, from my understanding. Yeah, it's going to be on YouTube. I use intermarket analysis. Yes. I use UCAD and NAS and AU. Not what you're expecting. I don't use S&P, US 30 and all that. I use UCAD, or is it this, and NASDAQ. UCAD and NASDAQ generally go against each other. So if I'm going to go long UCAD and it's just taking sell side, in order for me to go short NAS needs to take buy side. NAS is taking buy side, not done. So don't sell NAS. That's my rule still for myself. I think I missed the question. What is the Fibonacci levels used to identify where the market stop wants? I don't use Fibonacci levels to identify where the market stop wants. I don't count candles. I don't count 7 or I don't do that. I don't. Does it work? I don't know. My model works, so I stick to that. I think I saw a question that I missed. Can you explain liquidity concept? Not me. Okay. Everything that you use in trading can be easier if you define it. That's kind of what I was hinting at last week on Twitter. So everybody has highs, FVGs, buy side liquidity, sell side liquidity on areas of their market, of their charts that are not necessarily correct, in my opinion, right? This is all my opinion. This is not financial advice. This is why you're always seeing somebody trying to debate ICT structure. This is a FVG, this is not a FVG, this is a BPR, this is not a BPR. If you go back to the definition of what these things actually are, then life becomes easier. So for me, the black line here represents the current market price. Buy side liquidity represents areas in the market where there would be willing buyers. Willing buyers come in the form of 1, breakout traders who buy on strength. If they're going to be buying breakout, they're going to be at the range high. Where's the range high? Find the range, find the high. Easy stuff. Willing buyers come in the form of inefficiently traded price ranges where buy side was not offered. Right? Inefficiently traded ranges where buy side was not offered will create a pool of buy side liquidity. I'll leave that for you to study. Can you explain how I use the 4 AM open price for Judah swing? Should have expected that question. Pick a pair, pick one pair, and I will try to outline today's delivery using 4 AM and EU. Okay, cool. I don't want to mess up my daily chart, but why not? I'm gonna go to 50-minute chart. Or maybe 5 minutes, that's more data. So here's my EU M5. There's going to be multiple interpretations of this video, simply because some people know what I'm talking about and some people won't. This candle here represents the 4 AM opening price on my broker. 11 o'clock, right? That's 4 AM. If I tag that opening price, I'm going to make a whole lot of decisions around where price is at in relation to this opening price and the time that I trade. The time that I trade is painstakingly obvious now because I've said it a million times. I don't trade before 8 o'clock. On this broker, 8 o'clock is 1500. So, isn't it strange how at 8 o'clock, price is at that specific opening price? Just to be a troll for the fun of it, I'm going to find midnight opening price, which is 7 o'clock on this broker. And this is midnight opening price. Now, I won't argue if there's any sensitivity around this price, and I won't say that I've never taken a trade around midnight opening price and it works. All I'm saying is for my model, I use 4 AM opening price and I don't trade before 8 o'clock. If I was using midnight to trade, I wouldn't have been in that trade because at 8 o'clock, we're above midnight, and based on what ICT says, you want to buy below midnight opening price. All right, so I wouldn't be in a trade. For my model, 4 a.m., 8 o'clock, listen, folks, perfect. I'd be buying inside here. Where's the drawn liquidity? For me, it's not clear from this time frame. So this is when higher time frame would pop up for me. I love the H1 chart. I'd pop to a H1. I'd look for, you want to get a good amount of feed on. Here's a high. This high raided a couple highs. So I'm looking at the highs formed after that one. This one. Why? I believe failure swings holds liquidity. Simple. I'll go back to my M5 or M1 for that matter, doesn't matter. I'd be looking to enter here, and I'd be looking to exit here. Roughly about 20 pips. I'd be content with that. I didn't see anything on the higher time frame that says hold for more, so I would not be in this move. There's a whole lot of lows inside here. We dropped at 4 a.m. and then we started moving higher. Every low since this low was not stop wanted, which means there's a pool of sell-side liquidity building right here. Opportunities are born from a change in the state of delivery. My favorite ICT quote. If I'm bullish, I want to see opposing liquidity being taken. If I'm bullish, opposing liquidity is sell-side liquidity. So I outlined how this is a buy target or buy side objective. All of this liquidity here would make me not interested in selling, in buying. Or better yet, not interested in buying before these get taken. What if it screams higher and then I don't get a trade? Then I don't get a trade. I stick to the rules, so when the trades happen, they're glorious. I don't want to see this market sell off and get down here. But yeah. Certain time of the day and the beginning of the first. Let's call it 915 theory. I'll talk about that soon. How is a failure swing defined? It's a swing that fails to take out a previous swing. The definition of low resistance liquidity run. Hint, hint. Look at that. Hidden in plain sight. Do you have, just saw something about a specific time. Do you have any ideas where 942 opening price concept came from that Joshua uses? When you say Joshua, I'm assuming it's Josh Chart Lab. Where did it come from? I don't know where he got it from. I'll say that. I don't know where he got it from. Interesting time though. Close, but interesting time nonetheless. On framing a dealing range, do you frame the first high or low that takes? Yes. Always better to do that. Dealing ranges are to be approached with expectation and then validation. So you're expecting a bullish run. Expect a bullish dealing range. What's a bullish dealing range? I like the bullish dealing ranges to be the one that take sell side first. Take sell side and then wait for the buy side and then retracements. Has E or the bearish structure shifted in your opinion? No. Why no? This is the pool of buy side liquidity, this dotted line. This is the candle that closes above the buy side liquidity. I don't want to see price trade below here first before I start expecting retracement entries. Nice little structure inside here. It would be easy enough to say that this is a low and it got rated here, so this is a short. I've seen instances where this play out, but it's just not my model. Does it mean that you can't do it? I mean, sure, go ahead. If it works, it works. But I like when rules define my trading so that I don't get emotionally attached to the outcome. Looks like high resistance already happened before the push up. High resistance, FVG, Short-term high is low resistance in my book. There's a high resistance liquidity run. There's a fair value gap in there. And the highs fail to recapitalize that. That's bullish. That's usually when it becomes support. Close above, down candle, support, go. Why do you call it a failure swing even though it took a swing low? Where? This one here? Silver? Why am I calling this a failure swing? No answer.
No, not that one. The last swing.
This one here?
Oh, no, before the push up.
Here? Can you mark on the screen?
Yes, stop, please. Stop, please.
Okay. It's easy to get caught up or lost in price action if you're looking at every single minute detail. I only do that on a 1 minute chart. On this time frame, I look at major swing points. This is a major low. Another one here. Another one here. Another one here. Another one here. No major low was taken. So this low is still in the market. This low. Everything in my being says price needs to trade back down here. So if I was going to go short, I would look to that's not bad for stop loss as well. Less than 20 pips, so that's good. And this looks like it's like maybe a 3-to-1 or something. I reflect about that. ITL, LTL, short term and long term, or intermediate term, and yeah, that good stuff. I know that language. Can you expand on BPRs? Okay, let's put it like this. Whenever you're looking at the market, there are ranges of price. That horizontal line is not support or any highs, it's just a price level. So let's call that the $1 mark. And then right here is the $0 mark. Let's say this is the beginning of time right here. If this happens, one big up candle, buy side delivery. If it's all buy side, that's inefficiently traded. Let's say price trades down like this. What that means is buy side, sell side. That range of price is efficiently traded. It's only a balanced price range if we displace like that, in my opinion. That understanding or that logic can be transposed to individual candles. And then that becomes, if you have one up candle, down candle, BPR, or order block, depending on how you look at it, life is good. That could also mean up candle, all buy side, sell side offered, then displace. Everything below that price is balanced. So if the narrative in the market is bullish and we have a balanced price range and price does something like this and creates a low, this area or this green line can be viewed as support. So this is support. This is where persons are going to buy. All right. This is an area where they can buy. Why would they buy? Because it's been sold right there. This is sell side liquidity. Willing sellers are in the market. So then watch them buy. If they just bought it, I'm looking for expansion. So I want to see an order block get formed. Then I want to see the order block validated and gone. While this structure can form, the most important thing about what I just said is the order of delivery and understanding about why. I'd also want to see that order block tap this area, because if it doesn't tap it, it becomes a low above support, which means it's holding liquidity, which means they could create the order block and then still sweep it like this and then go that. But yeah, let's see if I can find an example. I'm gonna look for 3 green candles. Let's go M1 because I get more data. 3 green candles that became support. This one is nice, but this week didn't come down here, so not using it. I don't see one here. Hoping for more data. Here's one. Up candle. This comes back down. This is support ideas right here. So if we pull that over, support ideas. At this level, I don't want to see an order block get formed, validated, and I'd go long. Down candle, validated, I'd go long. This is a 1 minute chart. Is this a fantastic trade? No, it's not. Take this idea now and you transpose that to a H1 chart. A H1 swing like this is much better. That's why that's why I recommend don't look at 1 minute structure too much unless you understand time delivery or you get sucked into the price action. It's better to look at a H1 narrative, M15 narrative, or even an M5 narrative, and then use M1 to refine around the point of interest. So let's say this was forget the time frame, and let's say this is a H1 chart. That's the opening price of the H1 order block. Order block, BPR, right here. This down candle gets tapped. I'd be looking inside this candle's wick for a long. Let's say I'm not aggressive. I'd wait for this to get traded above because this becomes a propulsion candle. Buy, stops below, gone. That's it. Where's the liquidity before I got in? Look back. Where are the highs that were formed before this candle? Here, imbalance, all that good stuff. That's how I look at it. This can be recapitalized. So they did a sweep, big whoop. Go over here, it's recapitalized. What does that mean? Displacement at the old order block, lows above the old order block. It's the lower one. Displacement above it. Here's a liquidity right here. When this happens, I'm willing to buy. Again, if I'm buying here, where's my targets? Areas formed before I got in, because somebody went short here and they're looking to trail their stops. So they become my offset target. And it keeps happening over and over and over again. So it's not always textbook, but if you understand it, you can read the price action like this. This was 8 o'clock today. If I was trading this, I wouldn't have gotten a trade, or maybe I would, because trading time delivery, I'd see that low. And I'm pretty sure you could see it right now. This is the candle that closed below it. Validated. I would miss this because I don't trade at this time, but I'd be watching it and then I'd go long here. And I don't want to see the highs created before I got in, rated, and push it a step further. M1 entries with higher time frame objectives. Enter here, exit here. That's a lot of pips. M4, 3 green candles. AU M5, possible. 2 horizontal lines on EUs at my dealing range. I don't remember. I just drew them. Monthly Ethereum chart is a nice structure. I'm gonna have a couple more of these calls in the week. Today, I was just pop up to say hi, guys. I'll be here. I'm gonna end this one here. Do you have any time and stuff for London traders? Yeah, don't trade before 4 a.m. Don't trade before 4 a.m. If you're trading London. If you're trading New York, don't trade before 8 o'clock. Eliminates a lot of losses. All right, so enjoy the rest of your day, guys. I'll post this one up, and for the next one, if you're hopping on, bring questions, right? It's better. It's better when we converse. I don't want you to look at me as a know-it-all. So let's just talk. So enjoy the rest of your day and see ya.